Well, I feel extremely honored, one, because quite a few of you just heard me speak very recently and you're still here. I'm not sure why, like, wow, thank you. I hope you guys I hope everyone gets something out of today. And so one of the things I'd really like to just see if we can get hands raised for those of you who are live. How many of you do family law? Okay, so there's going to be some entry information for quite a few of you. That's good for me to know because that, it's a little bit more information for those who haven't really done as much family law as for those of you who have. Sorry, for those of you who have, I apologize for a little bit of some basic information, but hopefully that just gives you guys a reminder, kind of like continuing education. Oh yeah, this is what we need. Okay, feel free to chime in with questions. Let me see if I'm not sure I'll be able to see them, but I will make sure we leave time for questions. And so there. Okay. All right. So what is kind of the financial responsibility in preparing for a divorce, whether it's mediated or not? Of course, we have to prepare the inventory. We have to help. Honestly, in my opinion, we have to help clients prepare their budgets. If we prepare them for them, they don't have any skin in the game and they kind of fight me anyway. Hopefully not you guys, but they fight me 100%. Not that it's easy when they're doing it themselves, but they do have some more skin in the game and tend to use them for the duration when they have something involved. We need to find out what their health insurance will be for the non-employee or non-covered spouse. We need to educate them. There are so many times where at least one of the spouses knows absolutely nothing about their financial life because that's what we do. One person's taking care of the children, the other person's taking care of the money or whatever the case may be. And so one of them feels completely uneducated and oftentimes very stupid for having allowed themselves not to be involved. So there's a lot of education around potentially even what is a 401k? How do you pay bills? It can be pretty basic to some of us, the things that we have to teach people, but they haven't done it, especially in gray divorces when you've never paid a bill other than, groceries. We have to go through and teach them how to do those things. Valuation options, that may be real estate, that may be businesses, that may be even cars. So do we use Kelley Blue Book? Oh, wait, it's a 1966 Mustang. Kelley Blue Book doesn't do that, or it's a motorcycle, or it's a Vespa, or whatever. How do we even just get those vehicle values? NADA guides is one. I'm sorry, my watch just chimed. But NADA guides is one way that you can get boat or RV, motorcycle. That's the first place I go if Kelley Blue Book doesn't have a value. So try those. Also, you can send them to CarMax or other places and say, hey, go get an estimate. What would they give you for this car if they're willing to go? So there's lots of options for ways to get values. We have to identify separate versus community versus mixed. If there are lawyers involved, I always want lawyers' input on that because it's a legal issue, frankly, more than a financial issue. Money's money, but how it's classified is definitely something that we need to pay attention to the law. If there's not lawyers involved, then we still have to figure out, what goes in the community versus what goes below the line in separate. So then now hopefully we have everything ready and then we help them develop settlement options. That's basically mediation, right? Or at least preparing for mediation and then mediation. Figuring out support. What is their need? Without a budget, how in the world could we possibly know what they need? How do we know what the children need? So we need the budget, figure out how can they cover their expenses, and can the earner afford to supplement the other earners, the other spouse's household for X period of time? Budgets are imperative in determining support. Income taxes, I was just giving an example of income taxes. If you sell a property in the middle of your divorce, we need to know what the tax impact will be. If it's a business property, then if you're probably not going to be qualified to figure that out. We need to go to CPAs. We need to get estimates on all of that. And then, of course, we have financial infidelity and reimbursement claims, which can cause a decent amount of strife and challenges along the way. This is only some of them. There's a ton of financial data that we deal with. Every case is different, at least in my experience so far. And we just have to figure out, what do you have and what information do we need? Oh, and by the way, you're going to have lots of fun gathering all of the data in the beginning. So I'm sorry, but now go do your homework. Okay, so like I said, we need realistic budgets. For the clients, each of them, this is their post-divorce budget. And then we also need a budget for the children. I like to try to get both parties to agree to the children's budget. That doesn't always work, but we usually can get really close. Of course, really is relative. But in my opinion, we usually can get pretty close on the children's budget. And then each client, most of the time, I don't end up sharing the other spouse's budget. It just oftentimes seems to cause more problems than is necessary, but we can use the information to say they can't afford this option and this is why. If we have to share it, then I need permission, or at least in my opinion, I want to get permission from the lawyer and or spouse to make sure that it's okay that we share it. But what it does is it gives, for the fearful person, it shows them, yes, you can do this. I had one very fearful person who has an MBA, and she had turned over finances to her financial planning husband. That makes perfect sense. I take care of our finances. And she had become a mental health professional. And so we did a 10-year projection year over year for her budgets to say, this is what you're going to earn each year. So she has a guide and she checks in with me every year. This is where I am. And she's exceeding her income estimates every year because she has these goals that are written and she knows that this is what I need. And then I also have experience with clients who say, I'm going to give my spouse pretty much everything. And we try to make sure that they don't do what they can't do. I had one that he did what he couldn't do. And, he's going to make it work. And I do believe that he will, but everyone knew he is not going to be able to eat anything but ramen if he implements this. And I think he's going to do it. He knew what he was getting into by giving up what he agreed to. Most people, when we show them that they're going to have to eat ramen in their 40s, they say, okay, I'm not going to continue with this offer. It also assists in the emotional drivers. So people who are fearful, information, knowledge is power. I know budgets are not fun, but budgets give you knowledge. And so it can help stabilize. I like to use them based on their actual information as much as possible. I use Mint because it's a tool that's free. So it doesn't matter what their financial status is, and they can have it forever. It's Intuit. It's not going to go away. At least I don't expect. And then using the financial data, of course, we then have to say, okay, but Cobra, that your health insurance is going to change. Oh, you have to move. We go and figure out what are some places on the market that you probably won't get, but that you could afford, that you could live in, that have the right number of bedrooms and whatever. And so we can figure out a realistic current rent and things like that for spending. Yes, Heather, I think you're able to talk.
Will you address what are the rules on Cobra?
Cobra, you get 36 months for divorce. And I've never heard of a company that didn't use the guideline where it's 2% extra for administrative expenses for the company. So it's 100% of their cost plus 2%, but you get it for 36 months as a divorcee.
Okay, cool. Thank you very much.
Of course. Okay. Then let's see. So like I said, we figure out employment possibilities for the person who is launching their career. We figure out what is a realistic income. I had one client, also mental health is apparently common. So we had a mental health professional on the team. So I had that person that I could say, is this income estimate an actual realistic estimate, something that this person can actually rely on, or do we need to modify it? We talked to a few other people. What are their benefits going to be? Will they have any benefits? What are their hours? Their parents, are they going to be on call? You know, all of this, we try to figure out without being, I'm not a business coach, so I can't really do that, but try to figure out what is it that will fit within this budget and what is realistic for them. And then, like I said, the relaunch time. When we go back into career, when we do something different, we don't just automatically normally make what we hope to make by year 5. So we have a plan. This is what it's going to take for you to relaunch. And, based on the family situation, is there some maintenance involved because you have to relaunch? So all of that, hopefully that makes perfect sense. I'd like to make sure we leave time for this, which is the property spreadsheet. I know that some people use flip charts, and I did when I first started. And I am so glad that, and not for many reasons, but that we had COVID, because I learned to Zoom. And everyone ended up having to use their computers or having to have TVs on the walls. So I had some cases where we used flip charts, other cases where we had TVs where I could project the property spreadsheet onto a television. But now from my experience, everyone uses a property spreadsheet in Excel or in software, and we can use that with clients. So what is it? It's the current list of their assets and liabilities. It has a ton of information. It's basically their balance sheet, but it has all of the information that the lawyers will need in order to draft the decree, or at least to figure out what they need to draft the decree. So a balance sheet would not have a vehicle identification number on it. A property spreadsheet or inventory does. It tells us how it's titled. Is it in one or both names? Is it in one of the kids' names? Should it be down below? So that tells us, if the car is jointly titled, wife gets it. Well, now wife can take the documents into the DMV. She doesn't have to pay transfer taxes or anything to change the title. And all of that is done. The lawyer has it on the spreadsheet. And all of this is helpful in not just creating the agreement, but creating the decree and knowing what has to be done once they have the agreement in place. So it has the community property, then it has custodial and separate property down below. It doesn't mean we're agreeing to these different separate property versus community property in the beginning, but it at least is a starting point so that we can move things around easily, as opposed to on a flip chart where we're marking things out and moving things around. It helps us separate illiquid from liquid assets and retirement and deferred, all of the different types of accounts, so that we can keep in mind this person needs cash. Well, that's not cash today. So if this person gets 100% of everything else, but no cash, this option doesn't work for that person. It helps us think, because of that, it says these things are taxed at these different ways. If we're looking at it, the retirement is all in one section. Now Roth isn't taxed, but the rest of them, it points out, keep in mind, this will be taxed. So it just helps us to think through all of the different impacts. I like to include on the spreadsheet the cost basis. That way, if we do end up doing tax affecting on the spreadsheet, it's there. All we have to do is plug in a formula. So the information, like I said, the data is on there. We may not be using it, but we have it if we figure out that we need it. What are the interest rates and the monthly payments? I can't tell you how many times we've been going through an inventory and somebody says, well, what does that cost? It's right there. Look in the notes section. Everyone knows, because probably one of the spouses doesn't know what their mortgage payment is, and they don't know what PITI is. So does it include escrow or not? If it doesn't include escrow, do you have the property tax liability underneath it? All of that just points out you have all of the information, or you don't have all of the information yet. I also like to include who's the primary user. So if this is husband's vehicle, we're probably not going to give it to wife. So just saying on there, husband drives the car, that kind of tells us this car is probably going to go to husband, or if it's going to be sold potentially. For businesses, we say, or in certain investments, only one person can own those. So it says on there, don't give this to wife or husband because that person can't take ownership of it. So something just for us to remember as we're working through helping them divide up their estate. And then it also, other things that we can include is a lot of times they don't own 100% of whatever this asset is. So making sure that we're saying they don't own all of it. Somebody else is going to be involved. Okay. So how do we use the property spreadsheet or the inventory? Basically, I like to tell clients that this is everything that they've purchased, received, or saved during their marriage. It's everything they own or owe. Those two things, if you can say those two things, as we work through the spreadsheet, a lot of times they'll come back and say, oh my gosh, I forgot about da, da, da. It's really common that, you know, with divorce brain, they're not thinking about everything and they miss things. So we just have to keep reminding them, do we have everything on here? Some things that people can't take ownership of. A dentist is if you are a dentist and you own your dental practice, and your spouse is not a dentist, your spouse can't own your dental practice. There's quite a few professions that you have to be that credentialed profession in order for someone to own your business. So if your spouse wants to own your dental practice, you're going to have to sell it to a dentist.
So you're primarily talking about businesses, not tangible property.
Not tangible, no. Tangible, no.
Okay. Oh,
No.
okay. I just wasn't clear. Thank you.
Yeah, no. But yeah, investments, there's a decent number of different types of investments that say this, you know, these are the people who can own this. There can be partnerships. My business that I owned, I was wife on the agreement. So because the lawyers who drafted the documents wanted, even though we were married and in our 20s, to make sure that the husband owned the business if we were ever divorced. Now they're kicking themselves today, but that's not my problem. So yeah, there's a lot of just even random businesses that you wouldn't know if you don't look at the agreement that cannot be transferred to spouse without, in that case, they could have agreed, but they put it in the document. It was too late. So then once we get to the bottom and once we have an agreement, this is what I use to say, okay, lawyers, this is their agreement. And then I send this to the lawyers. We focus on, for the clients, we make sure, keep reminding them, we're not focusing on the house. We're not focusing on the business. We're not focusing on the retirement plan. We're focusing on everything. So we're this bottom line, which is what that gray line is, and we're going to go through the actual spreadsheet. That's the thing that we're focusing on. Do not think only about one or two items. That's something that we have to say over and over and over again with clients, at least in a lot of clients' cases. And then my main input is, if you don't know how to use Excel very well, if you don't know formulas, my strong recommendation is take a class in Excel, because it will help make your life so easy to know how to use Excel in this world. Why am I not able to? There. Okay. So I'm going to stop sharing my screen so that I can share the spreadsheet. Can you see the Excel spreadsheet? Okay. Huh.
Yes.
It's weird. Yeah, sorry, it went to another screen. Okay. All right. So this is an example of a spreadsheet for divorce. And sorry, those of you that just went through the DRC, because it's the exact same spreadsheet. So you guys have seen this. So how do we use it when we're first introducing this to a client? So the thing I start with is this is basically your balance sheet. Do you know what a balance sheet is? And probably 25% of the time they don't know what a balance sheet is. So I have to go even lower level than that. We're going to pretend like everyone does. Okay, this is your balance sheet for divorce. It breaks out all of your assets and liabilities. And like I said, it starts with different investment or ownership type categories. So we start with real estate. We have your home, and the value that we have on the spreadsheet, if you look up here, it's, and I wouldn't say that, but for you guys, the way that we calculate the number that's in here is the two of you got two CMAs, comparative market analyses from real estate agents, and they came in with different values. So we took the average of the two CMAs. Another option is to get an appraisal on the house. But what this client supposedly did was they got two CMAs. So this value, we're not saying that this is the value that you're agreeing to. We're saying that this is a starting point for the value of your home. And then you have a mortgage, both of which are titled jointly. And typically we just kind of walk through and make sure that they agree that everything is here, that, you know, we review the values that we've given things. We tell them where they came from, what these things are. This is where we're doing a lot of education for one spouse. And, you know, for those of you that do the data gathering, then, you know, we're reviewing it because they've probably seen it, but now we're saying, okay, is everything here? Can you swear to this? So we go through, as you can see, how is it titled? This is their car. It's jointly titled. The primary driver is the husband. The values came from Kelley Blue Book. We have the VIN, and we have the details on the loan. All of this tells us, can they afford, well, we've got the budget, but without looking at the budget, because this is what's in front of us, if something were to happen, would this person be able to afford the loan payment? Going down, we've got the next vehicle, then we threw in a Vespa just to be silly. Then we go to the bank accounts. We have everything on here, including Venmo and PayPal, anything else like that. PayPal is and Venmo can be places to hide money. And so I know most of us, and I've had quite a few surprised clients when they hear that you can accumulate a balance, but people can do it. You can also put a lot through it. And so if there's the financial infidelity concern, those are two places to look. If not, we just need to make sure it's on here because it's something that they own or owe. Cryptocurrency, I keep that on 100% until everyone says, yes, we do not have this. And then I delete the line. But cryptocurrency is another place of concern where people can hide money. INO. In the name of is INO, in the name of. And my real spreadsheet, it actually has a column that says titled. That way it's much easier. I can just look. So right here to the left, it has a column that says titled. I don't put in the name of. I actually have a column for that. I also have a column for the date because that's harder to update. But this is how most people do this. Okay, so all of the bank accounts, we think about bank accounts differently. This is cash. HSAs can transfer to another spouse, but they have to open a new HSA for the positions or money to transfer. But this is cash. Then we go to investments. This is also liquid. That doesn't mean it's tax-free. It just means they probably can get access to the money within less than a week, other than stock options. So again, you can see we have the cost basis, which tells me that they've paid more for, as of July, they had paid more for this 72.8 than it's worth. So they have a loss in this brokerage account. We don't need to take the tax effect into account for this investment if they were to sell it. It was a community property account. So all of that is fine. And then we have their restricted stock units. That Sometimes we can put a value in there. Other times we simply say, we're going to split these 50-50 if, as, and when between the two spouses. And we say if, as, and when, because if the employee leaves the company, then they just vanish and they are no longer of any value. So that's typically why we split these 50-50, even though they can be pretty cumbersome and a pain for both spouses. Okay, retirement accounts. Now we're thinking about this will have a tax impact. And the husband, who is the owner of this pension, had been with COA ERS prior to marriage. So we have Chuck Farber, who is a real person. I think he's in Austin, who is an actuary. We had him provide us a value for real. Those of you who were at the DRC, you have his value. We went to a professional and said, will you please value this pension? We can get an estimate ourselves, but it's not 100%. An actuary can say, this is the value in today's dollars of the pension that you will receive in retirement. And the separate property value is this. So in today's dollars, husband's pension was worth $106,000, but his separate property from the contributions prior to marriage are subtracted out of that, and it's $31,000. The wife has a 401k that started while they were married, so 100% of that is in their community estate. And this is telling us, okay, in both of these situations, if they divide it, we need a quadro. So just keeping in mind, there's a tax impact. These are retirement accounts, both are qualified, and those would both require a quadro. Okay, life insurance. These are all term. These are actually all group. They still have to be on here. I actually like to include who is the beneficiary. We know that it's one-time salary, but this will give us the information also once we have an agreement. Okay, do we need to cover any of this with life insurance? These are the only policies in place to do that with. So if we need, a permanent policy or an additional policy, we're going to have to go out and get one. We don't have one in place right now that we can assign. Okay, now we're into personal property. It is, and I deleted that slide, but it is my recommendation to try to get clients to separate these to the very best of their ability on their own. During the DRC presentation, I told everyone I had a ladle that was an inherited ladle, and the non-inherited spouse wanted this ladle. It was obviously not a new ladle. This was an old ladle. They both really wanted it, and we fought over it for quite a lot of money. And there was that was mine. Another person at the DRC, hers was a shot glass. And a friend of mine who's also a CDFA working in Austin, hers were trash cans. We can get down to extremely, stupid things that people fight over. And so if we start in the very beginning to say, this is the goal, unless you have something of value that we need to list on the spreadsheet, the two of you are going to divide everything, and we're just going to say, what's in husband's possession goes to husband. What's in wife's possession goes to wife. I can help you as much as I need to, but let's try to do this without creating an enormous amount of strife, because really these things are worth what you would get if you donated them to Goodwill and wrote it off on your tax return, or if you had a garage sale and sold all of your possessions. That's what we have for a value on a spreadsheet. So let's try really hard to make sure that we can come up with a way that you can even, divide this out without spending a ton of professional billable time or your own heartache, because it's almost never worth it. But then and $300, not a big thing, but we went ahead and put it on here just because to point something out. It's usually something more like a grand piano or some gorgeous piece of artwork that has, real value. That's the thing that now we've got to figure out. One, we've got to get a value for those. And two, how do we distribute that. Frequent flyer miles and rewards. Sometimes we use values because they don't always transfer easily. From what I hear, Southwest is actually the hardest to transfer of all of the rewards, which is shocking. And everyone who I've worked with comes back and says, Southwest is miserable, stop transferring. So NerdWallet is a great resource to just get an estimated value for pretty much. I haven't come across any reward points that NerdWallet doesn't already have a valuation for, and they have a calculator. So you just plug it all into their little calculator and then you get the value. So that's what these are. Or you can say, we're going to split them 50-50. Sometimes people say, well, we're not going to split them, but I agree that I will book for my spouse, my ex-spouse, when they're ready to go to a hotel or travel or something. That scares me a little bit, but it works. So the unreceived but already earned bonus can be a point of contention because they don't have it yet. And this is their money and they're probably relying on it to pay for something, maybe buy a car or something, but they've earned it in the marriage. So how are we going to deal with that? A lot of times we just say split it 50-50 after taxes, but it still needs to be on here just to make sure that we address it. And then there's also tax return carryovers. So that means, have you had losses? And you have losses that will carry over to future tax years. Those can actually be split between both spouses. Again, these are just things that I have on every spreadsheet, and then I delete them once I find out that they don't exist or they're the values are input if I find out that they do. Okay, so credit cards, those are just credit cards. Knowing how they're titled is extremely important. It's very, very rare to have a joint credit card. They're almost always actually in one person's name and the other person is an authorized user. It's kind of common to have a household where every credit card is in one person's name. And we need to know that because before they get divorced, and before they have an agreement, the other spouse really probably should get a bank account and a credit card, because how are they going to spend money if they have no forms of spending money once they have an agreement in place? So that gives us a good recommendation for that spouse as we're working through this data gathering. Then we have the attorney's fees and support team expenses. This is really once we're at mediation. As we're going, I'm not thinking of these expenses because they're just getting paid. But once we're at mediation, what is outstanding? How are we going to cover the bills due to each of us? And then income taxes, because guess what? This is a huge part of a decree. This is like 8 pages at least. What happens if we get audited for our previous year's tax returns? And what happens with, depending on, have we filed this year? If we have, or last year, if we have, then that's in this one. If we haven't, then what happens with this year, previous year really. So 2020 and prior, we know are finalized. What happens with those if we get audited? 2021, if it's finalized, we extend 2020 to 2021. If it's not finalized and filed, then we have to figure out what are we going to do with the tax return that we haven't yet filed, but that we owe imminently. And then what happens with this year, because we're going to be divorced before December 31st of this year. So all of that we have to discuss. It's usually pretty easy to get through all of that, but we need to tell the lawyer what to say. And we need to help them realize that all of this is part of a divorce. And then there may be an equalization payment to level things out and maintenance payments. Then we go down below the line. This is the line that I was saying is important to point out. We are not dividing 1 or 2 things. We're dividing all of that stuff up above. Remind them that over and over. We can't have an agreement on 2 things because you have a lot of other stuff too. Then we get down to the custodial accounts. These are things that they're already their own, but they're on here because we have to list everything that they own or owe. And sometimes we have to take into consideration the separate property that was acquired. Okay, so how do we use this in mediation? We have ideas. Let's create options. We can say that you're going to each own half of the house, but only wife is going to stay in the house. How do we deal with that? Okay, wife has to cover 100% of maintenance and repairs to $500 or $2,000, whatever that is. Husband kicks in with agreement on repairs after that. Property taxes are split 50-50. Mortgage payments are split 50-50. I just heard someone who husband's paying 100% of the mortgage, and that was the agreement. They own it 50-50. When they sell it, the proceeds are split 50-50. So it's important that you have all of those things documented so that everyone knows this is what happens when we co-own the house. If we don't co-own the house, wife can have it. Now, wife has the house, husband has to find a new place to live. Is he already out? If not, when is he going to move? How is he going to move? What is he, all of that. So this is how we would show that the wife is getting the house. Usually you don't have those there. Okay, this one is husband's car. So we're just gonna, we can go through the option generation with mediation, but I don't have time to do all of that. So we're not gonna do that. So the primary on this one was wife. So this shows you how quickly you can just say, this is who's getting this thing. And this is the financial impact of you receiving this in the divorce. But you can change it very, very easily. So with the flip chart, it was just, let's figure out, oh, wait, what did we do? No, when we have an agreement, I save this to a PDF and I send it in Excel and PDF to the clients. That way I know they can't modify the PDF version of it. So we can say that the checking is split 50-50 after all of the expenses clear, but the savings account, we're going to give only a quarter of it to the wife because husband now has moving expenses and he needs to get some furniture. So we're giving him a little bit more of that cash. We're going to give the wife the HSA. That's not really money that husband can use, at least for the house, all of that. And again, this is obviously not how it works in mediation. I'm just trying to show you how we use the spreadsheet. So they each keep their zero balance PayPal and Venmo account. Cryptocurrency, we've deleted that line, pretend like it's not there. So the brokerage account, we don't need to tax affect it. I mean, we can, but we don't need to. And we're going to go ahead and say, husband, you can have all of that. That gives you a little bit more liquidity. Now you can buy some furniture. And we're going to split the RSUs 50-50. And we're going to say, split them 50-50 if, as, and when. The reason we're saying that is because these may disappear. So if they vest and now they're worth something, as it happens and when it happens, we share ownership in these. Now RSUs, you technically won't ever be in the husband's name because the employer won't, well, apparently there are a few employers out there who allow it. I've not experienced any of them. It's rare, but those, if you find out that you have those, then you can go ahead and transfer them. It's extremely rare. Don't be surprised if you don't encounter them. But if you don't encounter them, then they stay, in this case, in the wife's name, and it is her job. She is now in charge of his ownership. And so she has to act in his best interest with his portion of her RSUs, even though they're not hers, if that makes sense. So what this is saying, we've explained what that means. Okay, we'll go ahead and give husband his full pension, whether we think that's a good idea or not. And you know what? We're going to go ahead and give husband her 401k as well. His pension, we don't need a quadro. Her 401k, we do. So now we have to have someone get us a sample quadro from Fidelity, from Dell. They're specific. So Fidelity's quadros, sample quadros are, it's plan specific. So we need a sample quadro before we send all of this to the lawyer. That's part of my document gathering. Let's just already have all of this. That way, when we send the agreement, we say, here's all of the documents that you need to make your life easy and so that you'll hire me again. So, okay. Husband gets his life insurance, wife gets hers. And again, they were great. They have separated their personal property. So what's in each of their possessions, they keep. If there's anything outstanding, we document it. Is there some boxes that are sitting in the garage that one of the spouses needs to pick up? If so, when will you get them, or by when will you get them? What are they? It may be just a picture. These are the boxes, but we're also not guaranteeing that the other spouse is going to make absolutely certain that these are going to be in perfect condition when you receive them. It's not their liability to take that on. So we just say, this is what will happen for the few things that they didn't come up with. We'll give husband the vinyl records. Again, they were really good with any frequent flyer miles. They're just going to keep their own. And I'm just copying and pasting. So this, we're going to split that 50-50. We don't know what the amount is. We don't know that it's going to happen. So we'll just say you're going to split that 50-50. They don't have carryovers. That's technically been deleted. We'll give wife the credit cards. And I'm doing this because she's got the house. And so, and by the way, what you don't know is wife has, I think it was 75% higher income than husband in this case. So she can pay that off. We'll give husband the retainer and let wife pay some of these expenses. Okay. All right. And then we're just going to say this one, we're splitting any liability or refund. We're going to split it 50-50, and we're going to document that over in notes. So we agree that we'll split this 50-50. And then I'm going to go ahead and do that. They've filed their tax return according to this. So everything's done. Sorry. No, that was right. There's another perfect example of how easy it is. When you make a mistake, you hit Control-Z and you've undone both of those mistakes that I just made. Okay, so for 2022, we're going to do the partition method. Then we spell out, what does that mean? It means you each pay your own taxes for your own income this year. We're pretending tax-wise that you were divorced as of January 1st, even though you didn't get divorced until August 26th. We're just going to make it easy on you. It may be better for them to do the other method, which I don't know what it's technically called, but where they actually have joint income up until August 26th, and then it's partitioned after. So that we're just documenting what we're doing. Okay, so where are we now? Dividing it, we automatically know we're at a 60-40 split. Wife got the house. Now, is this, like I said, this is not me saying this is what I would recommend doing. This is me just showing you how to use the spreadsheet. So we know that this client, this couple, they want a 50-50. So what changes do we need to make to have a 50-50 spreadsheet? We need to figure out how to shift $87,728 from the wife's side to the husband's side. And that's when I say it may be an equalization payment or it may be maintenance. So she may need to make maintenance payments, spousal maintenance payments to her husband to make it equal. Or she may need to refinance the house and pull some equity out of the house and have an equalization payment within 30 or 60 days. And then we would say that over here, she will refinance the house or get a second loan in today's world. probably doesn't want to refinance the house because the interest rate's lower on her current mortgage. So she's going to get a HELOC. But she's got 60, 90, whatever days to get her HELOC and close and pay husband $87,728. Okay, hopefully that made a lot of sense. And you guys are like, this is fantastic. And I am going to go start using Excel on a regular basis if you don't already. Okay, so the financial experts that we might end up using in cases, a financial planner, the person who says, don't do that. That's a horrible idea. That option doesn't work for you. And here's why. And typically, you know, at least for people as a fiduciary, we're going to say that doesn't work for either of you. And this is why, or this is good for both of you, whether we're neutral or not. We want to maintain the family dynamic so that you have a good relationship. We go to CPAs. I've talked about that. We have a forensic accountant. This one's not the fun case, right? That one's the one where we're having to figure out what's going on, but we need them. The loan, we've got to get the HELOC or the refi or the apartment. And I say apartment locator because I think that's what they're still called, but most of the time they're finding houses or duplexes or something. And so having these experts in your Rolodex, that's definitely, these are the people that I use on a very regular basis, or I am one. A credit counselor, I haven't actually used one yet, but that when I thought about it, I was like, that's somebody who would, for certain, probably, I'm guessing DRC clients, those would probably be very helpful. I have used bankruptcy lawyers. It's not on here, but that one I have had to use. There. And then here are some helpful sites, and I can send this out. But it's a sample divorce checklist. Fidelity has a lot of divorce documents that are just templates that you can use. You can modify to make them your own. I've got copy and paste is what you would do, but it gives you a lot of information on their divorce page that it's a huge help. The Texas AG monthly support calculator, child support calculator, I use that in every case that has children. I'm in there a lot. An amortization calculator, that one for people, especially people who just can't find their balance or something, then as long as you have the information, if you can get the information, then you can find whatever that data point is that you're missing. You can back into it with an amortization calculator, or you can show them this is what it's going to be. You can calculate total interest. If they're getting a loan to make the equalization, you can say, well, it's not going to cost you $87,000. It's going to cost you $124,000 because of interest. So all of those things, an amortization calculator can come in really handy. And then the Institute DFA website, it's the CDFA website. They have a lot of just also templates. So checklists, worksheets, I think a lot of these are things that you would want to cut down on. I don't like providing clients with 12 pages of a document checklist. I want it all on one sheet. You get overwhelmed with everything in divorce. And so giving them a document checklist that's 12 pages long, and I don't think any of these are, but just being, a little excessive. Those, you can make them your own. Let's see. Okay, as a mediator, what would you do if in a private session, one spouse says that they know, but can't prove that the other party is hiding assets and or seriously undervaluing assets, like underestimating the value of a spouse's business? And the spouse also says that they highly suspect that the other spouse is most certainly lying to their own attorney as to the extent of the value of their assets. Oh, yeah, that's never happened. Well, one of the things that we do on valuing is we don't listen to what the clients tell us the value is. That's why we have the business appraisers. That's why we have the real estate agents give us values. That's why we have business valuations. That's why we end up with forensic accountants if we need to. It's also why we make sure we look at tax returns when you look at a tax return, you look and see, do I have all of these accounts that are reporting income to this client listed on the spreadsheet? If I don't, I need these statements. PayPal, like I said, PayPal it's a place where people can really hide money. And I know that it doesn't seem like it because most of us think you just have a zero balance, but you can hide money in PayPal. So getting all of those transactions, you can see where people are spending money. And people lie to their lawyers all the time. People lie to me all the time. So hopefully not as much in collaborative, but if we're in neutral, as a mediator, then we also have to play that part and say, okay, well, let me do the research, because I've had spouses who were certain that clients, other spouses were lying and they were not proven correct. And had I not handled it the way that I did, I would have really lost some credibility and some respect, because it ended up not being, it has multiple times ended up not being the case. But we're in so much fear when we're going through a divorce that we're absolutely certain that something wrong is going on, especially when we're the injured party. So the other neutrals getting values, other proof of, let me see the statements, give me a year worth of statements, and I can walk you through the statements and show you this is where the money's going. All of these transfers are into your account. What else do we need to look at? How else can I help you feel comfortable that we have everything? Because I'm not guaranteeing that we do. But hopefully getting them to the point where eventually, if they're not lying, eventually the fearful spouse says, I'm done. I can't do this anymore. I haven't found anything, and we're good. Or we prove that they're lying. But you can't move on too quickly if you're still in the data gathering phase, you need to stay in the data gathering phase. That's why I say we have to go through everything on the spreadsheet before we get an agreement. We can't do part of it. When you list the fair market value of the family home, do you typically subtract out the realtor's fees and closing costs? That depends. If I'm tax affecting anything, it is my opinion that you tax affect everything, and that includes closing costs. So if I'm tax affecting the retirement accounts, then I do tax affect the family home or the business, or it should all, in my opinion, be impacted by taxes. If nothing is being impacted, then not. Who pays for the services of the forensic accountant, especially if the cheating spouse says that they are unwilling to pay for these services? Okay, the nice thing with collaborative is it's community estate. The community estate has to pay the expenses. With non-collaborative, that one's really hard, because that's part of it is educating the spouse to say this could cost $25,000 easily. It could be more than that. How are we going to cover this expense? And do you think we're going to find more than that? Because we need to make sure that, it's worth spending the money to uncover these things. And if it's not worth it, then you having the satisfaction of proving it at your expense is something that we need to help you come to terms with. I don't want you to spend so much money that you're injured financially to uncover $800. So that with mediation, it's kind of like, it's yet one more thing that we have to mediate, right? We have to figure out, how are we going to get these things covered? And, we aren't going to be guaranteed that someone's going to be paid, but with a forensic accountant, they're going to want payment up front. So how are we going to do this? Yes, you may have a copy of the slides. Financial infidelity. What are most common and how are they discovered? Are there penalties? Financial infidelity is I'm hiding money. I'm spending a ton of money on my paramour. I'm traveling excessively once I have the petition in place and it says I can't do these things. So whatever the petition says I can't do, now I'm doing them. Or prior to being going through the divorce process, I've been hiding lots of money. I've been doing things that community property should not spend money on. It benefits only me. It's not like me eating food. It's not me feeding the kids so I can go on a date. It's not spas. It's not lots of fingernail treatments, but it is, excessive hiding of or spending money. And it can be a challenge. Let me see, where did the question go? How are they discovered? Bank statements, Venmo, PayPal, forensic accounting. That's one of the things that we do. But really the financial planner even can do that. And then we have the reimbursement claim. The lawyers are oftentimes, if they're involved, the lawyers are so necessary in that. Otherwise, we get to do it. Wow, there's lots of messages. I don't know that we're going to get through all of this, but I'm trying. Penalties, not usually. I don't think really divorce has penalties. It's just you have to reimburse the estate for the money that you wasted. You're very welcome. You are educated in specialized area and doing mediation in this area. Does that work well with mediation process? Actually, it's worked really well with the mediation process because I can be very, if they have financial questions, I can explain it to them. But I do prefer to work with lawyers, especially if it's a complex case. I try very hard to always have a lawyer involved because my cases typically aren't the really, really basic cases. I have had a few of those when I first started, and then I did mediation to a degree, and then we just sent the agreement to a lawyer to have the decree drafted. But those were people who were extremely amicable, really honestly knew what they wanted before they were done. They just didn't know how to implement it correctly. And so now it's more of educating. This is what would happen if you took this option. This is what your financial world would look like. So I can do kind of a financial plan with the mediation to say, as a neutral, this is what it looks like for each of you financially. But like I said, I like to have lawyers involved. And do you provide your services as a mediator or as a hired financial? I do financial planning. I have financial planning clients, and then I do divorce work. They are two separate things. And so the divorce work is, yes, I tell them, if they're close to retirement, we do a retirement plan once we have options in place. Is this detrimental to you? Does this work? So that's something that you can do. If you have clients like that, you can bring on their financial planner to say, if we have this option on the table, what does it look like for each of them or one of them? Okay, that's just a bunch of periods. I think I got it. Does anybody have any questions that I missed? Oh, and I didn't. There's my contact information. Sorry, I left it on the wrong slide.
That's great. Perfect cartoon to end with too. Thank you so much. This is really great.